Are you feeling a bit daunted by the world of investments and not sure why you should or how you can get started? If so, then this is the video for you. My name is Lewis Crumpton and this is not financial advice, where we talk all things trading, personal finance and how to live your best life. And if you want to make more money in less time while having way more fun in life, then this is the channel for you. Make sure that you like this video, you subscribe to the channel for alerts on when we release our videos. As always, I have a free gift for you in the description of this video, which is going to dramatically speed up your journey to mastering money and the financial markets. Today, I am talking about one of the most important topics you could ever hear about: investing. Some people might find investing boring or complex or even intimidating, but let me tell you, investing is one of the most rewarding and exciting things that you can do in your life and with your hard-earned money. So why is investing so important? First, let's start with the basics. Investing is the process of putting your money to work to earn more money. You can invest in various assets such as stocks, bonds, mutual funds, property, art, watches, forex markets, and more. The goal of investing, though, is to achieve growth and financial security. Now, you might be thinking, why should I invest when I can just save my money in the bank? Well, let me give you some numbers to illustrate the point as to why that's a bad idea. Now, according to Google, the average interest rate for savings accounts right now is around about 0.06%, while the average annual return for the index trackers, which tracks the performance of the top stocks in a given country, is around about 10%. Let me put that in perspective for you. Now, suppose you have £10,000 in your savings account, earning you 0.06% interest. After 1 year, you would only earn £6 of interest. Now, let me say that you invested £10,000 in the S&P and earned a 10% return. After 1 year, your investment would now grow to £11,000, earning you £1,000 in returns. Which option sounds better for you, investing or saving? Now, those returns on the index tracker are an average, so don't go out there and think that you are guaranteed to make 10% return just because you put money into an index tracker. That is not how it works. Investing is not a get-rich-quick scheme. It requires patience, discipline, and a long-term perspective. However, the benefits of investing are enormous. By starting to invest today, you can create a better lifestyle for yourself tomorrow and in the future. I always say that every time you invest, you are buying the future that you want. Here are some ways that investing can help you achieve that. Firstly, investing can help you achieve financial freedom, which I know a lot of you want. By investing consistently over time, you can grow your wealth and eventually have enough money to cover your living expenses without having to work. Love the sound of that. Now, this means you can retire earlier, pursue your passions, travel the world, or simply spend more time with your loved ones. That is what I spend the majority of my time doing now. Second, investing can help you beat inflation, and inflation is the rate at which prices for goods and services increase over time. Wonder why we are currently having a cost of living crisis? That is down to inflation. If your money is not growing at the same rate as inflation as a minimum, you are effectively losing purchasing power. Investing in assets that have the potential to outpace inflation, such as stocks, such as property or forex trading, can help you maintain and grow your purchasing power over time. Third, investing can help you achieve your goals. Whether you want to buy a house, pay for your children's education at some fancy private school, start a business or passion project, investing can provide the necessary funds to achieve your goals. And by investing consistently and wisely, you can build a portfolio that generates enough returns to support your aspirations, your goals, your desires. Lastly, investing can help you make a really positive impact on the world around you. Now, some of you just won't care about that and are not interested in helping others. You know what? That is okay. I personally am wired to want to help others, so this is something I think about quite a lot. By investing in socially responsible companies, you can support businesses that align with your values and contribute to a better future. You can also invest in environmental, social, and governance funds that focus on sustainability, diversity, and ethical business practices. Or you could set up your own charity to make a specific impact in a specific way that you want to be helping others. Investing is one of the most important things you can do for the financial well-being and your future. By starting to invest today, you create a better lifestyle for yourself and you achieve your goals in a quicker time frame. Every time you delay the start of the process, you are actually making it harder for yourself to achieve the goals you have. Remember, investing is not a one-time event. It is a journey. The key is to start small, start with what you have, stay consistent and learn as much as you can along the way. Starting to invest today may seem like a daunting task, but it doesn't have to be. And there are some different options to consider when it comes to starting out as an investor and starting out with your investing. Number one, invest in the stock market. One of the most popular ways to invest is by purchasing stocks which represent a share of ownership in a publicly traded company. That means they're on the stock market, people can invest in it. Now you can invest in individual stocks, so you can buy shares on mutual funds or exchange traded funds, aka ETFs, which allow you to very easily diversify your portfolio across multiple companies and sectors to make it a bit more recession proof. Now this is a good way to go if you are only interested in long-term stuff. Your results will fluctuate on a yearly basis, but the hope is that over time, your account will grow. And this is when a lot of people suggest buying just index trackers. Number two, you could invest in property. Now, this can be a great investment opportunity, especially if you're interested in generating passive income. But take it from me, someone who has been investing in property for over 6 years now, it is rarely passive and it comes with a lot of headache. Yes, there are ways to start without any of your own money, but believe me, you will have to pay eventually. You'll have to pay back those investors eventually. Now you can invest in rental properties or real estate investment trusts or funds or crowdfunding platforms that allow you to invest in real estate projects in property for my UK friends with lower minimum investments. Ultimately, property investment is a lot easier when you have a lot of money. My personal view is that people should generate their wealth outside of property and then put it into property and use it as a store of wealth that also cash flows and appreciates over time. Number three, trade financial markets. Now this is what I focus on and what I specialize in teaching other people to do. The benefits of doing this using my method, the Star Trading method, is that you can create exceptional returns, additional income each and every single month consistently in a safe way while only spending 30 minutes per day doing it. Fourth way is to invest in yourself. Now, investing in yourself can be just as important as investing in stocks or real estate. Now, this means taking the time to improve your skills, improve your knowledge and your expertise, which can lead to better job opportunities, higher income, and a more fulfilling career, but ultimately gives you the skills you need to make money. Consider taking courses, attending conferences or workshops, or reading books in the area that you want to learn and master. And if you don't have a lot of money to start with, invest in education and personal development. I highly recommend it. That's what I did when I first started. So invest in your own financial education. And that means learning about finance, about investing strategies, about trading, maybe about the economy as well, which can help you make more informed investment decisions. You can read books, listen to podcasts, you can watch more of this YouTube channel, there's loads of stuff on here, take courses on investing and personal finance. You could start up with Star Trading and learn how to trade that way. The more you know, the better equipped you'll be to navigate the ups and downs of the markets. Number five, invest in your retirement. Finally, investing in your retirement is crucial for your long-term financial security. Consider opening up a retirement account. It can be a self-invested one, it can be invested by others. You get tax benefits if you do it yourself, and each country has different ones, but in general they can be a really good way to offset tax, and the interest they earn is very often tax-free. So if you have a business, you should be paying into a pension pot because that will lower the tax that you pay in your business too. Win-win. Money for the future, less tax now. So while investing may seem intimidating, the consequences of not investing can be even scarier. So what can happen if we don't invest? If we don't learn to trade? If you don't figure out a way to beat inflation and the cost of living crisis? So you could end up falling behind financially. With inflation, the value of money decreases over time. If you're simply saving money in a bank account that doesn't earn you interest, or at least enough interest, you may actually be losing money in the long run. By investing, you have the potential to earn returns that can help you keep up with inflation and increase your wealth. You will potentially miss out on opportunities. By not investing, you may miss out on potential ways that you could grow your wealth. For example, if you had invested £1,000 in Amazon stock when it first went public in 1997, that investment would be worth over 1.2 million today. Now, of course, hindsight is 20/20 and is perfect, but the point is that by not investing, you may miss out on potential opportunities to grow your wealth over time once you have the skill sets and the understanding that you need. Thirdly, insufficient retirement savings. Now, this one actually really scares me. If you don't invest in your retirement, you may not have enough saved up to support yourself in your golden years. Now, this can lead to a lower standard of living and having to work longer than you planned. Nobody wants that. So what age do you want to retire? What money do you need to make each month to make that happen? And is it worth looking at? Yes, it is. Definitely have a look at that. Number 4, limited financial freedom. Without investing, you may be limited in your ability to pursue your dreams and to enjoy financial freedom. You may not be able to afford to travel or take your family on the holidays you want to take them on. You may never get the opportunity to live in your dream home or drive your dream car. I'm not particularly motivated by cars, but I know a lot of people are. Now, these are just a few of the potential consequences of not starting to invest today. However, it is important to remember that it's also never too late to start. Whether you're just starting out or nearing retirement age already, there are investment options available that can help you achieve your financial goals. So don't let fear hold you back from taking control of your life and of your financial future. And if you don't want to delay getting started with investing, then take some form of small action today. And to do that, take a look at the description of this video. There is a thank you gift about how you can start investing through trading financial markets. So make sure that you like this video, you subscribe to the channel, and you share it with somebody that you think it can help or inspire. My name is Lewis Crompton, and this is not financial advice.